When you think about investing, it might sound complicated or intimidating at first, but at its core, investing is actually pretty simple. You're putting your money to work for you. Instead of just letting your hard-earned cash sit around, you're giving it a job, hoping it will grow over time and help you reach your financial goals. Whether you're saving for a dream vacation, a new car, or even retirement, investing is a way to make your money do more than just sit in your wallet or bank account. If you simply leave your money in a regular savings account, it might feel safe, but it's not really growing much. In fact, with inflation, the value of your money can actually shrink over time. That's why people look for ways to make their money work harder, by investing it in things that have the potential to increase in value, like stocks, bonds, or even real estate. Think of investing like planting a seed in a garden. You start with something small, maybe just a few dollars, and you plant it by choosing where to invest. Over time, with patience and care, that seed can grow into something much bigger. Just like a plant needs sunlight and water, your investments need time and attention. The longer you let them grow, the more potential they have to blossom into something substantial, helping you build wealth for the future. The most common types of investments you'll hear about are stocks and bonds. These are the building blocks of most investment portfolios, and understanding them is a great place to start your investing journey. Stocks are like owning a tiny piece of a big company. When you buy a stock, you become a partial owner of that business. If the company does well, the value of your stock can go up, and you might even earn a share of the profits through dividends. But stocks can also go down in value, so there's some risk involved. Bonds, on the other hand, are like loans you give to the government or to companies. In return, they promise to pay you back with interest over time. Bonds are generally considered less risky than stocks, which makes them a popular choice for people who want a steadier, more predictable return on their investment. Because of their lower risk, bonds are often recommended for beginners, or for people who want to protect their money while still earning a bit more than a savings account would offer. They can be a great way to start building your investment confidence. But what if you're curious about other ways to invest? Beyond stocks and bonds, there's a whole world of alternative investments, like real estate, gold, or even new digital assets like cryptocurrencies. Exploring these options can be exciting, but it's important to do your research and understand the risks before diving in. No matter where you choose to put your money, the key is to start learning, stay curious, and make choices that fit your goals and comfort level. Alternative investments are like venturing off the beaten path. They are non-traditional investments, different from the usual stocks and bonds. Imagine exploring a new city instead of just staying in your neighborhood. These investments often involve different types of assets, from real estate and tangible goods to more complex financial instruments. They may offer unique benefits like protection against inflation when prices go up, or access to exclusive markets. However, they also come with their own set of risks and rewards. Real estate is a classic example of an alternative investment. It involves buying, holding, and selling properties like houses, apartments, or commercial buildings. Think of it as owning a piece of the world. People always need a place to live or work, making real estate a potentially stable investment. You can earn money through rent or by selling the property at a higher price than you bought it for. Investing in art and precious metals is like owning a piece of history or a tangible asset. Art can include paintings, sculptures, or even vintage cars. Precious metals are things like gold and silver. These investments can be exciting and beautiful to own. Their value often goes up when there's a lot of uncertainty in the world because people see them as safe havens for their money. Okay, so hedge funds and private equity are more complex alternative investments. They involve pooling money from multiple investors to invest in a variety of assets. Imagine a group of experienced treasure hunters. Think of them as fund managers, using your money to find hidden gems or, profitable investments in the market. These investments can be very profitable, but honestly, they are also very risky and usually require a lot of money to get started. Cryptocurrencies like Bitcoin and Ethereum have become, increasingly popular in recent years. They're digital currencies that use cryptography for security. Think of them like virtual gold. But their value can fluctuate wildly, making them a high-risk, high-reward investment. It's really important to understand the technology and the risks involved before investing in cryptocurrencies. While alternative investments can be exciting, not everyone can just jump in right away. Some investments, like hedge funds and private equity, might require you to be an accredited investor. This means you need to meet certain income or net worth requirements. Other investments, like real estate, may have lower entry barriers but still require significant capital. It's essential to research the specific requirements and regulations for each investment before you start. Investing in alternative assets might seem daunting, especially if you're new to the world of finance or have only ever heard about stocks and bonds. But honestly, it doesn't have to be overwhelming. The key is to break the process down into manageable steps and approach it with curiosity and patience. Remember, every successful investor started somewhere, and the most important thing is simply to begin. Start by taking a close look at your own financial situation. Determine your investment goals. Are you looking for long-term growth, steady income, or maybe a mix of both? Next, think about your risk tolerance. Are you comfortable with the possibility of losing some money in exchange for higher potential returns, or do you prefer safer, more stable options? Also, be honest with yourself about how much money you can realistically invest without impacting your day-to-day life. Setting clear, realistic goals and boundaries will help guide your decisions and keep you on track. Once you have a sense of your goals and limits, it's time to dive into research. Learn about the different types of alternative investments available, such as real estate, private equity, collectibles, or cryptocurrencies. Each type comes with its own set of potential returns, risks, and time horizons. Take the time to understand how these investments work, what drives their value, and what could go wrong. The more you know, the more confident you'll feel making decisions. There's a wealth of information out there to help you get started. You can find detailed guides and articles online, read books written by experienced investors, or even join online forums and communities where people share their experiences. Don't hesitate to reach out to financial advisors or mentors who can offer personalized advice and answer your questions. Sometimes, just having a conversation with someone knowledgeable can make things much clearer. Once you feel informed and ready, start exploring the different investment platforms or marketplaces that specialize in your chosen area. Compare their features, fees, and user experiences. Look for platforms with strong reputations, transparent processes, and good customer support. Many platforms offer educational resources and demo accounts, so you can get a feel for how things work before committing real money. For example, there are online platforms that make it easy to invest in real estate crowdfunding, buy shares in valuable art, or build a portfolio of cryptocurrencies, all from your computer or smartphone. As you explore, remember to diversify your investments to spread out risk and increase your chances of success. Starting small and learning as you go is perfectly okay. The most important step is to take action and begin your journey into alternative investing. Like any investment, alternative investments come with their own unique set of advantages and disadvantages. Understanding both sides is essential before making any decisions, as these types of investments can behave very differently from traditional stocks and bonds. Whether you're a seasoned investor or just starting to explore new opportunities, it's important to weigh the pros and cons carefully to see if alternative investments fit your financial goals and risk tolerance. So let's talk about some advantages first. One of the biggest benefits of alternative investments is the potential for portfolio diversification. By adding assets that don't move in lockstep with the stock market, you can help protect your investments from market volatility. This means that when stocks are down, your alternative assets might hold steady or even increase in value, helping to balance out your overall returns. Diversification is a key strategy for managing risk, and alternative investments can play a crucial role in this. For example, assets like real estate, commodities, private equity, or hedge funds often react differently to economic events than traditional investments. By spreading your money across a wider range of assets, you reduce the impact that any single investment's poor performance can have on your overall portfolio. Another advantage is the potential for higher returns. Some alternative investments, such as venture capital, private equity, or certain types of real estate, have historically offered the chance for significant gains, especially over the long term. While these opportunities often come with higher risk, they can also provide access to markets and strategies that aren't available through traditional investments. and certain types, like real estate and precious metals, can act as a hedge against inflation. When the cost of living rises, the value of assets like property or gold often increases as well, helping to preserve your purchasing power. This makes them especially attractive during times of economic uncertainty or when inflation is on the rise. Additionally, alternative investments can offer access to unique markets and innovative financial products. For example, investing in art, collectibles, or cryptocurrencies can provide exposure to trends and opportunities that aren't available in the stock market. This can make your investment experience more interesting and potentially more rewarding. Now, let's look at some of the disadvantages. Some alternative investments can be pretty complex and difficult to understand, especially if you're just starting out. The strategies, structures, and risks involved can be much more complicated than simply buying shares of a company. This complexity can make it harder to evaluate whether an investment is right for you, and it may require more time and effort to research and monitor your holdings. Many alternative investments also have less transparency than traditional assets. Information about pricing, performance, and underlying risks may not be as readily available, making it challenging to make fully informed decisions. This lack of transparency can increase the risk of unexpected losses or hidden fees. There's also liquidity risk, which means it might be tough to sell your investments quickly or easily convert them to cash. Unlike stocks or bonds, which can often be sold in seconds on an exchange, alternative assets like real estate, private equity, or collectibles may take weeks, months, or even years to sell. This can be a problem if you need access to your money in a hurry. And of course, the value of alternative investments can fluctuate significantly, leading to potential losses. Because these assets are often less regulated and more sensitive to market conditions, their prices can swing dramatically. This volatility can be unsettling, especially for investors who prefer stable, predictable returns. Another important consideration is the cost. Alternative investments often come with higher fees and expenses than traditional investments. These can include management fees, performance fees, transaction costs, and even special taxes. Over time, these costs can eat into your returns, so it's important to understand exactly what you're paying for. Before diving into the world of alternative investments, it's crucial to do your due diligence. This means taking the time to research each opportunity thoroughly, understanding how it fits into your overall financial plan, and being realistic about the risks and rewards involved. This includes researching, understanding the risks involved, and maybe even seeking advice from a financial advisor. A professional can help you navigate the complexities, identify suitable opportunities, and avoid common pitfalls that can trip up even experienced investors. Investing wisely in alternative assets can potentially enhance your portfolio and open up new avenues for financial growth. By carefully considering both the advantages and disadvantages, and by staying informed and proactive, you can make alternative investments a valuable part of your long-term financial strategy.